In today's video, we're going to compare both Verizon and AT&T to determine which stock might be the better buying opportunity. Right now, they're both offering a dividend yield of over 7%, which definitely makes them attractive to people seeking higher yielding opportunities, and it's probably for this reason why it was requested over on our Patreon. These companies probably don't need much of an introduction. They're both very large communication businesses that have existed for decades. AT&T was founded as the Bell Telephone Company back in 1875, and Verizon would eventually result out of the Department of Justice breaking up AT&T in 1984. They were originally known as Bell Atlantic before eventually becoming Verizon. Let's start by taking a look at both companies from the top and then going in deeper. Right now, AT&T stock, ticker symbol T, is offering a 7.06% dividend yield, while Verizon, VZ, is offering a 7.53% yield. If we expand the share price of AT&T, you'll see they did have a good amount of growth from the 80s up until the early 2000s. Their stock was traded long before the 1980s, but this is all the data that Google has for us. But you can see it peaked around 1999 when we went through the dot-com bubble, and it never fully regained to its former glory. Between the early 2000s and 2017, their stock did see some growth along with some spikes here and there, but since 2017, AT&T's been headed downwards. As of today, it looks like their stock is currently trading around the price that it was back in 2003. Fortunately though, at the very least, it was paying a quarterly dividend this whole time. Verizon has a few similarities to AT&T, but right away we can see a couple of big differences. Again, they did grow all throughout the 80s and 90s, grew and then fell after the dot-com bubble, and then afterwards saw some recovery in their stock. But for Verizon, they did grow a lot better between the early 2000s up until about 2020. If we compare AT&T and Verizon side by side, we can see that after the early 2000s, it was VZ that had the most growth. Since the 1980s, Verizon's been the better performer without taking dividends into consideration. But let's be honest, both companies are not what they used to be back in the 80s, so I don't think it's worth spending much time analyzing performance for that far back. One thing that is worth looking at from as long ago as possible are the dividend distributions. According to Verizon, they've grown their dividend every year for the last 15 years. Their last quarterly dividend was for 65.25 cents per share, and they have a 5-year dividend growth rate of 2.04%. AT&T, on the other hand, recently went through a dividend cut in 2022, going from 52 cents a share to 27.75 cents per share. Before this happened, their stock was a member of the Dividend Aristocrats group, which are an elite group of companies that have been able to grow their dividends every year for at least 25 consecutive years. After this happened, the company has yet to grow its dividend, and it's still paying the same amount to this day. Let's look at their financial performance, starting with revenue over the last 10 years. AT&T and Verizon have completely different situations going on with their revenue. AT&T saw a lot more growth in revenue compared to Verizon over the last decade, but in 2020, the company took a hard fall and they saw their revenue drop 21% from the previous year. It's gone from $181 billion in 2019 to $143 billion in 2020, $134 billion in 2021, and now $121 billion last year. This graph shows the results by quarter, so you can see that as of the last 2 quarters, they have been seeing a little bit of growth. Verizon, on the other hand, is a completely different story. You can see that there's been dips in their revenue, but ultimately it's still been growing upward. Both companies offer similar products here in the US, which includes mobile phone service and home internet, and they also offer these services to small businesses. The issue that AT&T and Verizon are facing is that there's a lot of competition in these areas. You've got other mobile companies like T-Mobile, and now Amazon recently claimed that they're entering this market. There's also countless home internet providers available, including Comcast, CenturyLink, HughesNet, and others. There really just isn't a whole lot of growth in these sectors, which is why both companies aren't really seeing any kind of explosive revenue jumps. Another metric worth looking at is operating margin, which is calculated by dividing operating income by revenue. It's the percentage of profits after a company's cost of goods sold and operating expenses are subtracted from revenue reported in the quarter. A higher percentage means that the business is earning more profit from each transaction. If we compare AT&T with Verizon, we can see that Verizon is slightly more profitable compared to AT&T. But things have been improving for AT&T, while Verizon has remained stable since about 2016. We'll have to wait and see if things keep improving for AT&T, but Verizon has a very long history of beating them in this area. What's been making things worse for these companies has been rising interest rates. When the Feds increase interest rates, it does negatively impact communication companies in a few ways. First, it becomes more expensive to borrow money, which obviously isn't unique to communication businesses, but what is unique is that companies in this sector can have very large capital expenditures and high debt levels. Investing in new plants and infrastructure as well as making improvements and repairs becomes a lot more expensive during periods of high interest rates. As these companies are constantly racing to deliver better quality internet and wider coverage, this can either slow down their progress or it can make it a whole lot more expensive. Speaking of interest rates, another important thing to look at with these companies is the amount of debt that they hold. Obviously, the more debt that you have means the more debt expense a company is going to have each quarter. And if taking out more debt is going to be required right now, then it's only going to be more expensive. Over the last 10 years, we've seen both companies increase the amount of debt that they've taken on, but AT&T's been making headlines for their moves to try to reduce their overall debt. In 2021, they had over $195 billion in total debt on their balance sheet, whereas now they brought it all the way down to $136 billion. That's a really sizable reduction in such a short amount of time. Verizon, on the other hand, has kept increasing its debt over the last decade. You can see there's been some reductions here and there, but people have been concerned about how much debt this company's been taking on. You can see things got especially bad between 2020 and 2022 when there was a $27 billion increase. Last month, CEO Hans Vestberg briefly said that they were focused on paying down their debt, but he didn't go into detail in terms of how aggressively they were actually going to pursue that. It's only going to raise more concerns for Verizon going forward. If revenue and net income are hardly growing and they keep piling on the debt, then how much longer is that dividend going to be able to keep growing? When companies fall on hard times and they need money quickly, cutting the dividend is usually one of the first things they do because it's the easiest way to get more money. Let's go ahead and look at the total return for both stocks over the last 10 years and see how they compare with each other. If you would have invested $10,000 in VZ and $10,000 in T, you'd be looking at some pretty lame returns. You can see in the course of a decade, you would have gotten an 11.71% return from Verizon and a 6.04% total return from AT&T. That comes out to an average annual return of 1.11% and 0.59% respectively. These are pretty disappointing considering you could have gotten similar returns from a high-yield savings account or a money market fund had you chosen to stay invested for the whole decade. Verizon did have much better returns up until recently, so if you were lucky enough to sell out during that time, you would have looked at a much better return. To summarize, based upon everything we've looked at, I think Verizon is definitely the clear winner in this competition. They have better revenue growth and a much higher operating margin. Not to mention they haven't cut their dividend like AT&T recently did. Despite that though, there are some big concerns I have about the future of Verizon stock, considering that the amount of debt they've been taking on and their revenue hasn't exactly been growing too much. As these companies are currently competing to roll out 5G cell phone coverage, both Verizon and AT&T are pretty far behind T-Mobile. Although both Verizon and AT&T have better 4G coverage, T-Mobile's really pushed ahead with their 5G expansion. AT&T is still dealing with the aftermath of their failed move to buy Time Warner, which was a huge mess for them. But like I mentioned, Verizon would have to be my favorite over AT&T, although I don't have any plans of buying either stock anytime soon. I used to be a shareholder of AT&T, but I sold out many years ago. But if Verizon doesn't work harder on paying down that debt and increasing their revenue, then there's going to be some issues in the future for their dividend. How long will it take for it to become a serious issue? I don't know, but the falling share price is a good indicator that investors are also worried about the future of this company. But with that being said, that's going to wrap up our look at both Verizon and AT&T. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.